Thank you. Thank you for inviting me and giving me a chance to share the Finternet work with all of you. Maybe I'll kick it off with a quick introduction. So I've spent the last essentially 10 years designing and building digital public infrastructure. And so I was part of the team that rolled out digital identity, which is known as Aadhaar to over 1.4 billion people. It then went on to architect a wallet infrastructure, which is known as DigiLocker, that holds over 9 billion credentials today. And then the realization was that as people have control over their identity and credentials, how do they transact? And that really became the genesis of UPI, which was a simple protocol to transfer value from one store to any other, used over, 700 million times a day. Who doesn't use UPI here? Raise your hand. Okay, not a single hand, right? And then we went on to build Account Aggregator, which was an infrastructure to give people control of their financial data. And so through that journey of working with both public authorities and private sector, designing this infrastructure, we realized that the way we've been building financial infrastructure, it's sort of like every time you build a new car, you build a new road. And so it's very purpose specific. It's specific to an asset class. It's specific to a sector. It's specific to a jurisdiction like a country. And as we imagine more types of use cases coming to life, we realized we needed fundamentally new rails. And that's what became the genesis of the Finternet, because we felt that it's really important. I mean, if you go back in time and just think about Indian rupee in your pocket right now, because of UPI, almost none of you may have that. But imagine it was in your pocket and you took out that physical token and looked at it, right? And it was a self-contained, 10 rupees is embedded on that, self-verifying, all the watermarks and other protection features are embedded on that, and self-describing token. And it was transactable, and you could transfer it to anyone across the world if you physically met them, right? You were only constrained by the laws of physics. And the same existed for physical property records, the same existed for equity shares. Now, obviously, if you wanted to take that 10 rupees, tear it up into a rupee, it was really difficult. If you want to transfer it across borders, it's difficult. But fundamentally, you had that power in your own hands. And that gave you transactability. You want to transfer it to someone, you can do that. You weren't dependent on, do those APIs make it possible, or are those servers awake for you to do that transaction? And so in our view, when we look at the recent tokenization developments that are happening, driven by public chains and broader cryptographic developments, it's sort of a back to the future moment, where you can now take different asset classes, whether that is regulated assets like money, securities, registered assets like your physical property or a vehicle, attested assets like gold, silver, energy resources, or all your crypto assets, and give you back that control. And so fundamentally, what Finternet is about is creating a network where users have agency across these different asset classes and their identities and credentials. How do you unify? Because these are obviously governed very differently. They have different laws, different rules. So how do you unify it to the end user? And how do you build it on fundamentally, what we call universal rails? So it's not like every time for a new car, you're building a new highway. And our view is financial flows will fundamentally move in that direction. If you look at the developments on public chains, they're fundamentally asset agnostic, right? So you're not creating a new chain for each asset type. And so as this is evolving, the way we look at it, and here's a simplified high-level flow, right? Imagine you as a user have gold. You want to tokenize that gold. And we're talking about how do you do this at population scale, right? And so you need governance primitives at the core, because obviously, is it 5 carats? Is it 10 carats? Is it 24 carats? So you need an ecosystem that drives the issuance, that drives the legal frameworks around that issuance. And so you'll have different trust providers, but we feel fundamentally that'll create an open market. You then tokenize it. So you create that digital representation. And now an individual can use that on the internet capital markets. Because fundamentally, think of it, this is what companies do all the time. If companies hold gold reserves, central banks hold gold reserves, it's fundamentally fungible. They're able to reuse that in other transactions for collateral and so on. Why can't an individual do that, right? And so if we can create tokenized representations with strong legal binding of the physical asset with the digital representation, that creates trust. so that you don't just have a digital token that's not backed by anything, right? That will create a lot of issues downstream. That allows us to truly democratize access to financial services. And so if any of you are interested, you can read more on finternetlab.io on how we see it working, how do you truly embed compliance as part of the flow. But we've set up a global ecosystem that's focused on three broad pillars. One is global regulatory capacity building. So what are the legal frameworks? What are the regulatory frameworks to accelerate this transition? Second, building out this technical infrastructure, because for those of you that might be familiar working on public chains, how do you deal with aspects of scale, confidentiality, interoperability, each asset on its own chain, how does that work? And the third part is really real world adoption. And so there are a lot of cohorts within the Finternet ecosystem that are focused on all three of this. And if any of you are interested, again, reach out to us. What I wanted to do was show a quick demo of this in action as well. Maybe if we can transition to that, that would be useful. They bring it up. Perfect. So out here is a simple flow essentially of a stablecoin payment. If that had to then be bridged using the Finternet rails into the Indian ecosystem, and how would that work? Both on you receiving stablecoins internally within the country, but then eventually how do you also make transfers outside? And so our view is many of even the compliance requirements, for example, capital control norms, can natively be embedded as part of the flow. The KYC requirements can natively be embedded as part of the flow. And you can actually have far better observability of these global capital flows that are taking place than traditional infrastructure, because then that's often buried in tons of paperwork. If any of you have made transactions before, right, transferring, and who are you sending it and for what purpose, and all of that can then fundamentally become programmatic. So this is just a quick overview that we put together of this in action. We can go back to the slides now. So we've gone on to publish quite a few papers, particularly for those interested in the cross-border space. An interesting paper was written by Bill Dudley, who was the former US Fed chair, on how Finternet could transform global cross-border payments. And we feel one of the interesting things is, if you look at a lot of countries, I mean, you have 100 countries that have a population less than 10 million, they can't implement infrastructure from scratch. In fact, we tried that. You go in, you try to build a domestic payment system, you try to interlink payment systems. I've recently shifted from India to Singapore. It's really difficult. UPI linked to the Singapore ecosystem. It's been taking 5 years. It's still not available for consumers at scale, really. It's available in select merchants. And so the reason that is there is because it comes down to the bilateral complexity. One part is the tech complexity of connecting these systems, but second is often the bilateral, the legal and liability structures and commercial incentives. But for those of you that are transacting on public chains, fundamentally, it's already global, it's already universal. And so I think there's a very interesting development on how can you harness that universality of different asset types that are being transacted, but layer on trust. Because the moment you start to work on this infrastructure and it starts to get adopted at scale, trust becomes extremely critical, right? We see that even in the developments in the US. And we have Raj here from a regulator within the US system, is moment you start touching a large number of people, you can't say everything will be solved by smart contracts, right? We assume that at one point, smart contracts will take care of all our problems, but that doesn't happen. And so you need strong legal frameworks to build out acceptance of it in a domestic economy or in global economies. Because what happens when things go wrong? What happens when there's a fraud? What happens for dispute resolution? Who mediates this? Who arbitrates this? And so what you'll start to see is some of the mental models really maturing, in terms of how we thought about the world if you're in the crypto ecosystem over the last few years. But as it starts hitting mainstream adoption, basic things, recoverability becomes extremely important, consumer protection becomes extremely important, liability structures become important. And our view is actually these rails allow us to embed all of that far better than traditional infrastructure within the flow. And so you can really build a system at scale that goes on to reach billions of people with much stronger compliance. I mean, if you think about it, what Aadhaar really showed was, on one end, you give people agency over their digital identity. 1.4 billion people have it. It's nothing but a digital credential. You allow them to open any account of their choice, right? Whether it's a bank account, a capital markets account, and so on. And so now you've got hundreds of millions of Indians participating in the formal financial system against a strongly backed KYC. So you didn't lower your risk norms. You used technology to fundamentally create a tool and gave that tool back to individuals or businesses. And so in some sense, you scaled out access. You brought hundreds of millions into the fold, but you also made the system safer because now every transaction, you have clear accountability behind that. And so our view is really, rather than looking at this as a trade-off, if you design technology the right way, you design technology to fundamentally empower individuals and businesses, we can go on to scale out adoption to billions of users while strengthening safety, while strengthening stability within the system. And this is extremely important. I mean, even if you look at the capital market developments in India and the recent growth, which we also have Pramod Rao, a former regulator from SEBI, which is India's capital markets regulator here, and he'll be talking to you later today. A large part of that was driven by the fact that now retail investors could participate. They could easily open an account. They could easily transact using UPI. They could easily get advice using account aggregator. And that's bringing in $3 billion into our capital markets month on month. And that's huge. So that what's happening is when you use technology infrastructure that fundamentally lowers transaction cost and brings hundreds of millions of people into the fold, that goes on to also have macro changes as a country. And so it's extremely important, as many of you are builders in this space, to really think about some of these primitives. How do you use technology to empower individuals and businesses? As you start to scale out the usage of this technology, how do you truly make it, safer, especially when it's coming to financial assets? Because you can't say, yeah, we'll tokenize gold, we'll tokenize physical property, but if you have a social engineering attack, a scammer makes a phone call to you, and then, oops, by mistake, you sent your property to someone else, right, in a different jurisdiction. That will happen because technologically you can implement that. So it's really important that as many of you start to think about building companies in this space, designing for scale and the way you design for risk protections is very different than scaling what works, a quick hacked up project for a few hundred users. And so what we feel really within the Finternet is focused on what are those primitives that will unlock adoption of this at scale, both legal primitives as well as technical primitives. And so if any of you are interested in any of these areas, either you're looking at tokenizing different types of assets, either you're looking at building certain experiences for users, one of the things we feel very strongly about is a key part of our thesis is how do you unify these different assets? And if you look at the developments that are happening on the agentic side, I think that's extremely powerful because if you're building any agentic experience, the agent can give you advice. But how do you execute that transaction? Do you land back up at the branch with physical documents? No, that doesn't work. So you'll fundamentally, the convergence of tokenization and agents, while still early, is going to revolutionize financial markets both in India and across the world. Because what we'll get to is a point where every individual now has their own agent that because of tokenization, it's not limited by infrastructure access, so it can work across any asset that you have. I mean, tomorrow, a simple agent, one of the biggest problems we have in India is unclaimed assets. Unclaimed assets is a problem because it's really difficult to put out nominations. But now an agent can tell me every time I buy an asset, here's a simple nomination flow. And if the agent tells me that, if the underlying asset is tokenized, I can just execute it and immediately apply it across any type of asset. I would programmatically create a will and execute that will across any type of asset versus having to contract a large team of lawyers. And so I think there are real fundamental advances that we are seeing as this technology develops. And so it'll be really exciting to talk to many of you today. There's a bunch of people from the Finternet team out here. And if any of these ideas interest you, reach out. And yeah, have a great rest of your Apex. Thank you so much.